Very good morning, friends. I hope I'm audible. Very good morning. Hope everybody is doing good. So, I guess what we need to do today is start off with the concept of journal entries with you, the accounting process. In the previous two sessions, what we have covered so far, we basically focused on what is accounting, understanding the framework of accounting, and then we understood the accounting terminologies. We understood what is an asset, what is a liability for the balance sheet point of view, and understanding income and expenses as well. So now we're going to go on to the process of accounting. The idea is to teach you the art, the fine art of making the journal, the ledger, the trial balance, and then, of course, the financial statements as well. So I think let's begin the journey. So I am now going to expose you onto the concept of making a journal. And that would be on the basis of a very simple three-step model which I have developed. So I'm going to give you a simple three-step model in this case. Now let's go step by step. So there are two techniques of making a journal. One is called a traditional technique and one is called a modern technique. You want to start with which technique, the easier one or the tougher one? I think the easier one. We should start with the easier technique, which is a modern technique. For those who might be learning for the first time, I think it's easy to go with the easier approach. What do you say? And then we go to the traditional technique, which is slightly little technical. I think that's a better idea to do it in the morning, I guess. Okay, so let me first of all give you the inputs on the modern technique. So what I am giving you right now is the art of making a journal with the help of modern technique. There are two techniques, as I said. We're first going to learn the modern technique, then we're going to discuss the traditional technique. So my step number one is what I call double entry bookkeeping. The first step is what I call double entry bookkeeping. Now, let me explain this to you. What do I mean by double entry bookkeeping? To make it simple to begin with, I'm just going to give you a basic concept. We will get into a technical detail later, but let's understand what is a double entry bookkeeping. I'm just going to stop sharing the screen to explain you something at this stage. Now, for the time being, mind the words carefully. For the time being, what I'm going to do, every transaction has got two effects. Let's assume one effect is cash. To begin with, in all the transactions, I'm going to take one effect as cash. That means the cash will either increase or the cash will either decrease. I think let's put it like this. I'm just going to give you a basic funda. I'm assuming that you're getting exposed to the art of making journal entries for the first time. I know many of you would know this, but just to, make it very clear, at least for those who are learning it for the first time, let's make it very clear. So in every transaction, one effect is I'll consider cash. The cash will either increase or the cash will either decrease. Now let's give you a funda. If there is an expense, the cash will increase or decrease? Decrease. If there is an income, will the cash increase or decrease? Increase. So let's get this very clear. If there is an income, the cash will increase. If there is an expense, the cash will decrease. If you buy an asset, the cash will decrease. If you take a loan from someone, the cash will increase. So because every transaction will involve an asset, liability, income, and expense. Mind the word carefully. Every transaction will involve asset, liability, income, and expense. So when you say there is an income, cash will increase. When there is an expense, cash will decrease. If there is an asset purchased, cash will decrease. And if there is a liability, the cash will increase. Am I clear on the cash front? So I'm just looking at one aspect, that is cash, when the cash will go up, when the cash will go down. I hope I'm clear with the concept of increase, decrease in cash. Super. Don't worry, we'll document this out as well, but let's get the finer art. I want to make your thinking like AI, where you start thinking on a very chronological order and we never ever go wrong in life. Now, as I said, there is a double entry bookkeeping. So one aspect is the cash. The other aspect is asset, liability, income, expense. Now, when I give you a transaction, you need to understand, is there an asset involved? Is there a liability involved? Is there an income involved? Is there an expense involved? Take the name of the asset. Take the name of the income. Take the name of the expense. So you need to start taking the name of the asset, liability, income, and expense. So every transaction I give you to begin with, one will be cash for sure, and the other is going to be asset, liability, income, expense. That's the basic rule. So we've decided that in our first step, that is double entry bookkeeping, we are going to consider double effect. Now let's take an example and you help me. Let us say I say there is a rent received. Now only think what I think, you don't think more than that. Now let's say there is rent received. Cash is increasing or cash is decreasing. First, we're looking at the aspect of cash. So there is an increase in cash. And when you say rent is received, what is it? Asset, liability, expense, or income? That's right. There is a rent which is income. So we're going to take the name rent. So in this transaction, there are going to be two accounts affected. In this transaction, there will be two accounts affected. One is rent and one is cash. Don't worry, we'll take more examples. But you need to think chronologically. I always tell people that, getting the art of understanding entries is very important, because even in higher level of accounting, when you're stuck up in terms of any concept, what is important is to go back and see what is the accounting entry for the transaction. It gives you a lot of conceptual clarity in life. Of course, we'll get to complex entries later. So let's take more example. Let's say I purchased a machine. Now there is a cash involved. The cash will increase. Can't hear you. Am I audible, friends? Or is there, I think, maybe some problem locally to you? Can you just re-log in? I think that might help. So when I'm looking at a machine purchased, the cash will decrease. And what is the other one? You're buying a machine, asset, liability, income, expense. Buying a machine undoubtedly is an asset, so which means I'll take the name machine. So the two accounts which will be affected is going to be machine as well as cash. Life simple. So my first step is you need to identify two accounts in the transaction. Mind it carefully. One to begin with by default is cash. The other one is going to be asset, liability, income, expense. Okay, let me just, I think, document this part. This is my step number one. This is my step number one. So in a double entry bookkeeping, what you are going to do in this particular case, you need to basically identify the two accounts. To begin with, as I said, to begin with, one account we're going to take by default as cash to begin with. And the other one is going to be either an asset or a liability or an income or an expense. So it's going to be asset, liability, income, and expense. Now, let's work a little more on step number one. We're going to work more on step number one. So let's give you more examples. You decide the two accounts. So one, of course, is cash. So you don't need to apply mind. You just need to apply your mind on the second one. Let's begin. Salary paid. Give me the two accounts. There is a salary which is paid. So take the name of the expense. Take the name of the expense. Don't call it as expense. Take the name of the expense. Salary as well as cash. Super. That's wonderful indeed. So we're tuning your mind. So that is salary and there is cash. Now, let's take more example. Then I'm going to give you some more fundamental rules to, insert in this. Salary paid can be liability as well. No, 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 no. If you're making a payment of the salary, you're making a payment of cash. If the salary is not paid, then there is no cash. We'll come to that later. Right now, I'm going to go safe. I will consider every transaction the cash is increasing, decreasing, so it will not create any liability at the moment because you made the payment there and then. Okay, let's take more example. Loan taken. I have taken a loan. Give me the two accounts. That's wonderful. One is a cash and the other one is supposed to be loan. Wow. I think that's brilliant indeed. You started thinking exactly the way I want. Sometimes I always try to maneuver the people's thinking. And I think I'm exactly doing that early in the morning, trying to maneuver your thinking according to my needs. Wonderful. Okay, let's take one or two examples further and then move ahead. Let's say, for example, I am raising money through equity shares. I am raising money through equity shares. Give me the two accounts. Wonderful. One is cash and one is equity shares. And that equity is supposed to be technically a liability. Because when you take money from the shareholders, that is called own funds and that is called equity. When you take money from the outsiders, that is called loan funds. Super. So I think I've achieved my first objective. Now, let's make one addition to you. In the very first step, I'm just going to add one more inputs at this stage. When you buy goods, what does goods means? Something in which you deal. Let's say my company is dealing in garments. Then when I say I buy garments, I'll use the word purchase. I'll use the word purchase. Similarly, if I sell goods, goods means again in my example garments, I'm going to use the word sale. So when you buy goods, when I use the word goods, goods means in what you deal. You are a dealer of cement. Buying cement is purchase. Selling cement is sale. Now, if you buy a machine, don't call it as purchase. The word purchase and the word sale is going to be used only when you buy and sell goods. If you're going to buy anything other than goods, any asset will take the name of the asset. Don't use the word purchase, don't use the word sale. So the basic input is then when I say that you're going to buy goods, you're going to say purchase. You're going to sell goods, I'm going to use the word sale. But if you buy and sell anything other than goods, you can use the name of the asset. You can use the name of that particular asset itself. Got the point? So I think let me document that clarification to you as well. So in terms of my step number one, I just gave you a basic input further. So let's put that as a note. So I'm just giving you a little exception to this, a little exception out here or a note out here that if you purchase goods, the focus is goods. I'm going to use the word purchase instead of calling it as goods. Don't call it as goods, call it as purchase. When you're going to sell goods, the focus is on the goods. Don't use the word goods, use the word sale. And goods are what you deal in. Goods are what you deal in. So when you say that I say it is goods, goods is something in which we deal, in which we deal. So if you're a garment dealer, then garments are goods. If you're a cement dealer, the cement is good. So I hope I'm very clear on my thought process on step number one. So I am giving you a three-step model. By the way, what are you going to call this three-step model as? Let me ensure that you at least remember my name as well. So what are you going to call this three-step model as? What's the nickname of the three-step model in this particular case? I like it. That's called the KV's three-step model. Patented rights. So I'm going to put the heading. This is KV's three-step model. And go step by step. Trust me, you'll never ever go wrong in life. You just need to go step by step. KV's three-step model. So I guess I'm pretty clear in terms of my first step out of the three-step. Let's quickly give you some rapid fire questions before we go to the step number two to make it absolutely clear indeed. I'm going to give you transactions. You have to think of the two accounts. One by default to begin with is cash. You just need to think of the other one. Let's consider I am a machine dealer. Let's say I am dealing in machines. I buy machines. Two accounts. I am a machine dealer and I buy machines. Very good, but I am getting some people telling me machine and cash. No, no, no. I gave you this example to make you sentimental. When you're dealing in machines, then in that case, the machine is a purchase to me. You're not going to use the word machine. You're going to use the word purchases. Okay, I am a machine dealer and I am selling machine, the two accounts. That's right. Now we're going to use the word sales and the cash because I am selling goods. Machine dealer means for me it is a good. Next, I am not a machine dealer. I'm not a machine dealer. I buy a machine, two accounts. Now it is going to be machine and cash because I'm not a dealer of machine. So it's going to be machine and cash. Superb. I'm not a machine dealer. I sell a machine. I'm not a machine dealer. I sell a machine. Then is machine and cash. Anybody's got any questions so far? Are we clear with the step number one? The only clarification given is when to use the word purchase and sale. Otherwise, use the name asset, liability, income, and expense with the name of the asset, the name of the liability, etc., etc. Are we pretty clear with step one? Can we go to the step number two? Super. So let's go ahead and let's go to the next step with you. So we go to the step number two, which is very easy. Once you get the step number one, trust me, step number two is very, very, very easy. Now, in terms of the step number two, you've already done that in step one. But what I'm going to do, the two accounts which you identified, you need to identify, is it asset, liability, income, expense? And by default right now, cash is always an asset. Now, what do you need to do, which you've already done in step one, but we're going to, chronologically again define that. So when we're going to consider the two accounts, so out of them, one of the account is by default cash. Cash is always an asset. Cash is always an asset because when you say cash, it is something which is going to give you benefits in the future. You have to identify that out of the two accounts, one account is cash, which is asset. The other one is asset, liability, income, and expense, which you've already done that. So I don't think so. I need to explain that to you. But still, on a safe side, let's take an example. Now, we're not going to consider cash. We're just going to consider the other account. I'll give you the name. You decide, is it asset, liability, income, and expense? Only for one account. Loan taken, you get one of the accounts called loan. What is it? And that's right, it's liability. Super. Rent received. So what is that? Rent. And that is income. Super. Salary paid. So what is that? Salary account, which is their expense. Super. Purchase. What is purchase? And purchase would also be an expense. Great. And if I say sales, and if I say sales, then it becomes an income. Superb. Machinery. Machinery. And that's right, it is an asset. Wow. I know you've all learned the art of making the entry, but I'm pretty confident that I'm at least changing the way you think. So, yes. I know you know the art of making entries, but I am still trying to, change the way you think. That's great. I like it. If I'm able to maneuver, then I think you'll be start thinking in a very chronological order. Brilliant. Okay, now we go to the step three. We're just a minute away now in terms of making journal entry. Now we go to the step number three. Once you've done that in step number two, we go to the step number three. And in terms of the step number three, what we're going to do? In terms of the step number three, what we're going to do, we will now apply some rules. Rules means no judgments. Rules means that you just need to apply them as it is. And I'm going to give you some rules. And the rule is in terms of asset, if there is an increase, I'll say debit the asset. The person who created accounting, decided because he was a mathematician. The person who created accounting was actually a mathematician. Since he was a mathematician, his thought process was left hand side, right hand side. So he decided that one account will be a debit and the other one will be a credit. And for this purpose, he decided certain rules because he wanted to ensure mathematically everything will tally at the end. So what he did, he said one account debit and one account credit. So if the asset increases, you will debit the asset. If the asset decreases, you will credit the asset. The debit stands with the symbol DR, doctor, but we call it as debit in accounts, not doctor. And the credit is symbolizes with the word CR, that is credit. So when you say debit will symbolically represent DR, credit is CR. Similarly, if there is a liability, the rule in this particular case is if there is an increase, credit, if there is a decrease, debit. Reverse of the asset. So when you look at the increase in asset, debit, and vice versa, increase in the liability, credit, and vice versa. And as far as expense is concerned, always debit. As far as expense is concerned, always debit. As far as income is concerned, it is always credit. Wow, make the life simple. So what I'm going to do, I'm going to take some set of entries where we're going to apply all three steps in a chronological order. And for those who are learning accounting for the first time, trust me, go step by step. You'll never ever go wrong. So the rules in step three is asset increase or decrease, debit, credit. Liabilities increase and decrease, credit, debit. Expense always a debit, income's always a credit. So out of the two accounts, one will be a debit for sure, the other one will be credit. You can never have an entry where both are debits. You can never have an entry where both are credits. So one thing is 100% guaranteed. In a particular journal entry, when you're drafting, one account will get a debit. So pretty sure the other one account will definitely be a credit. If you're getting a debit for both, it is cannot be possible. If you're getting a credit for both, it is not possible. One will be a debit, which means you can decide a debit for one. You decide only for one account, take the other one the opposite. If you decide for one account it's a debit, the other one is a credit. If you decide it is credit, the other one is a debit. Isn't the life simple? Shall we now try some examples with you to understand this in a little more detail? As of now, I have taken only transactions in cash. I will take transactions in other than cash next phase. I don't want to disturb people who are learning accounting for the first time. Because if you start loving accounting, you get more passionate about the subject and you are going to get more confidence as well. We don't want to break anybody's confidence at this stage. We want everybody gets expertise in accounting. Lovely. So let's, I think, take one example. We'll go one by one. Let's take three, four examples rather. So I'm going to take an example. Don't run with it. You need to go step by step with me, absolutely step by step with me as I proceed. So let's take a few transactions. We'll apply all the three steps. So I'm going to give you transactions. So as I give you the transactions, you need to first of all go to the step number one, get the two accounts. You need to apply the step number two, identify is it asset liability, income and expense, and then decide which one gets a debit and which one gets a credit. Let's go step by step. I give you the transaction, there is a cash sale. Tell me which are the two accounts which will be taken in this particular case. That's wonderful indeed. So one is cash and the other one is sales. One is cash by default and the other one is sale. The cash, of course, is an asset. And sales, I think you can easily decide. Somebody said expense. No, 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 no. Sale is income. Now, I'll tell you one thing which you can easier one for you. Incomes are always given a credit. So if sales gets a credit, then the cash by default gets a debit. So when you put an entry, you need to get into the habit of writing the debit part first and then writing the credit part later. So we'll put the entry cash, debit, sales, credit. When you put the entry, we never say sales, credit, and cash, debit. The art of writing the entry is you need to write the debit first and then the credit. So we'll always record the debit first. So cash gets a debit and sales as an income gets a credit. In any case, if you apply the rules, the cash is increasing, the asset is increasing, therefore the cash gets a debit, and sales is an income, it always gets a credit. Wonderful. Let's take more examples. Transaction number two, I'm taking a cash purchase. I'm taking a cash purchase. So what are the two accounts which will be involved? That's right. One is cash and one is purchase. Cash is undoubtedly an asset and purchase is, of course, an expense. Pick the easier one out. Expenses are always debited. If the expenses are always debited, then in that particular case, you can write the entry purchase gets a debit and the cash gets a credit. Wow. Let me ask that question to those who are learning accounting for the first time. Is it easy or not? For those who are learning accounting first time, what do you say? Isn't that easy? You just need to think on a chronological order. Isn't that easy? Super. Let's go further. I think majority, and let me also ask those friends who are from the accounting background as well. I think you must be enjoying the art of getting the entries in a very simplified manner where the chances of going wrong is getting negligible. Super. Let's go ahead and let's now give you one or two more transactions, then we'll complicate. Number three. Let's say there is a machine. Let's say there is a machine purchased. Give me the two accounts. So one by default, of course, you rightly said is cash, and the other one is going to be machine. Cash is, of course, an asset, and machine is also an asset. So you can think of any one of the two. Machine is increasing, cash is decreasing. So if machine is increasing, then machine gets a debit, increase in the asset gets a debit, and decrease in the asset gets a credit, and that makes the entry. Wow. I think we're all comfortable with the basic entries. I think I am ready now to do some complicated inputs, right? I think this was damn easy in nature, correct? Time to increase level. Say yes. This is too basic indeed. Let's now increase the level. Now we're going to go to a little more complicated part and let's increase the level. Now hear me carefully because I'm just going to add another fresh element to your thoughts. I'm now going to consider transactions where cash is not involved. I'm now going to consider transactions where the cash is not involved because by default right now what I was doing that I said every time a transaction is happening there is a cash increase or a decrease. Now let's not take cash. Let's take credit sale. Now when a company makes a credit sale, one of course is the sales. And when you say it is a credit sale, you don't get money. When you make a credit sale, you call the customer as a debtor. So instead of using the word cash, you're going to use the word debtor. Remember, when I say cash sale, you're taking cash. Of course, you're taking sales. Now, when I say credit sales, you're taking sales, but instead of cash, you're going to call the customer as a debtor. You can call the debtor even as a trade receivable. You can even call it as an accounts receivable. You call them as a debtors, trade receivable, accounts receivable, though there is a technical differences between them, but we'll not get into that. But right now you can interchangeably use the word debtors, trade receivable, as well as account receivable. Next, when I consider the case of a sundry debtors, yes, you can use the word sundry debtors as well. That's also equally fine. Now, when you say there is a purchase and there is a credit purchase, one account is purchase, but there's no cash. So we call we call the supplier creditor. You call it as a trades payable. You call it as a accounts payable. So you call the supplier as creditor, trades payable, accounts payable. You can use them interchangeably for the time being. So which means we are now clear with two more terms in mind. A customer is called a debtor, trade receivable, account receivable. A supplier is called creditor, accounts payable, trades payable. Correct? So instead of cash, you might use the word debtors and creditors. Remember, customer is debtor, supplier is creditor. Let's add that example. So the name of the debtor is given. Can we mention that in the entry or we used to do debtors only? Well, generally in higher level of accounting, you can use the word name of the party, but preferably if you call it trade receivables, that's great. But even if you use the name of the party, it's perfectly okay. So it doesn't make a difference at all. You can use the name of the party, but when a company is making collective sales to so many customers, the generic word trade receivable is more preferable, right? So let me, I think, put those two transactions also to you. So I am coming back to the agenda. So we just added two little simple transactions. So we said credit sale. Credit sales means the money will be collected later. So one of the accounts is, of course, sales. But instead of cash, you're going to get debtors. You can call it as a trade receivable. You can call it as an accounts receivable, whatever you choose. Sales is an income. And what about debtors? Debtors is supposed to be what? Debtors in this case is going to be what? That's right. It is going to be an asset. So income is always a credit. So in this particular case, we'll put the entry account receivable or debtors gets a debit and the sales gets a credit. Now, there are certain observations which is coming to my mind. I have typically, this question to my friends from the accounting background. I want to ask you a simple little question at this stage. You made a cash sale, the sales was given a credit. You made a credit sales, the sales was given a credit. Do you recall any entry where the sales is ever given a debit? Yeah, I'm just thinking that certain accounts always gets a credit. Now, sales return is a different account. Sales is a different account and a sales return is a different account. So I'm looking at sales. Ever remember in your life where you debit a sales account? Do you remember any time in your life doing an entry where the sales is ever given a debit? No. So sales is one account which always gets a credit. And somebody said, so sales is an income and income is always credited. Wow. I'm shortly going to answer that question as well. Anyway, as far as sales is concerned, this is one account which always gets a credit. As you're going to learn the art of accounting, you'll come to know that certain accounts always gets a debit. Certain accounts always gets a credit. Certain accounts generally is a debit or a credit. So life becomes easy to that extent. Wow. Let's now go to the next entry which we were discussing. Now let's consider the case of credit purchases. So my next transaction is credit purchases. So there is no cash involved. So one of course is the purchases and one is of course creditors, or you call it as accounts payable. You call it as trades payable. Purchase is an expense and creditors, that would be a liability. Purchase is an expense. Expense is always debited. So purchase gets a debit. So the creditors or the accounts payable gets a credit. Another question coming to my accounting friends. Do you remember that purchase? Because if you see the credit purchase and the cash purchase, purchase is getting a debit. So can I say, do you remember any time where the purchase is given a credit? Or can I say, just like sales is always a credit, the purchase is always a debit? Is that thought correct? Then when you look at this, the purchase always gets a debit. I got one answer on that, that yes, purchase gets a debit. Are you sure that purchase in the entry is always a debit? Can there be a situation where the purchase gets a credit? Yes. Sales will never get a debit, but there are entries where purchases can get a credit. We'll not discuss them at this stage, but I want to make it clear that as far as a purchase is concerned, don't think that it always gets a debit. So here the rule that expenses are always given a debit, will slightly fail. So there are entries where the purchase gets a credit. We'll look at those entries later. I don't want to mess up with things at this stage. Okay, that's pretty okay. Can we complicate this a little more? Comfortable so far? Can we complicate this a little more? I now need to introduce some more terminologies to you at this stage. Great. Then we're going to conduct a test also later. We're going to conduct a test also slightly later. So let me now introduce certain things more to you. I'm now going to first of all introduce you to a concept. I don't remember telling you this or not. I don't remember, but did I ever tell you the concept of accrual basis of accounting? I don't remember. I don't think so. Did I tell you that accounting is done on accrual? No. Okay. So now I think let's introduce you to something interesting. Let me share the board once again and let me introduce you to the concept. There are basically two bases of accounting. There are basically two bases of accounting. When I say two bases of accounting, one is called cash basis and the other one is called accrual basis. There are two bases of accounting. One is called a cash basis and one is called an accrual basis. Now let's understand what is a cash and accrual basis. Now, when you look at a cash and accrual basis, it applies to incomes and expense. It applies to income and expense, mind you. I did not say asset and liability. It applies to income and expense. When a company follows a cash basis, you record the income when you receive it. You record an expense when it is paid. A cash basis means I'll record the income when you receive. I'll record the expense when you pay. There is actual inflow and outflow of cash, then I record the income and expense. But in accrual basis, we record the income when it is earned. You record the expense when it is incurred. The actual receipt in terms of income is not important. The actual payment of the expense is not important. So in accrual basis, I always call this as a accrual basis of accounting, where the incomes are captured when they're earned. The expenses are captured when they're incurred. So the inflow outflow is not important. And what is important is companies all across the world, or you can say accounting, accrual basis is mandatory. It's not a matter of choice for the company that they can apply a cash basis. When you do accounting, the default accounting basis is always an accrual basis. You need to record an income when you earn it, not necessarily you receive. For example, when you recorded a credit sales, you did not receive cash. In fact, there itself, I introduced the concept of accrual basis indirectly. When I made a credit purchase, I did not pay money, but I incurred the expense and therefore the entry was captured. So we will account on accrual basis. The day you earn an income, you made a credit sale, you earned an income. The day you incur an expense, you made a credit purchase, you incurred an expense. So you don't need to wait for the money to come. You don't need to wait for the money to go. Inflow, outflow of cash is not relevant, but earning is important, incurring is important. And it is not a matter of choice for the companies. Accounting world over, unless mentioned otherwise, always follows an accrual basis of accounting. So let me now quickly ask you some questions, then we'll introduce some more terms and get on to the next stage of entries with you. If there is a salary to be paid to the employee, but it is not paid, are you going to record the salary? The salary was supposed to be paid to the employee, but it was not paid. Are you going to record the salary? Yes, because it is incurred. If there is a rent which was to be received, I did not receive the rent, will you capture the income? Yes, I will. I will, because you've earned the rent. You've earned the rent. So we follow accrual basis. Now, if you remember now, I'm going very systematic. I gave you exposure on cash transactions. Then I started introducing you to the concept of non-cash transactions, wherein we talked of, first of all, a credit sale and credit purchase. Now we're going to talk of incomes and expense other than sale and purchase. We're going to talk of income and expense other than sale and purchase. So in terms of income and expense other than sale and purchase, we will record incomes when we earn, we'll record expense when it is incurred. So the question now arises, which accounts? Now please hear me carefully. I'm now going to introduce some terms to you. Please hear this carefully. This can be slightly confusing. So let me just, I think, introduce some terms now to you. I am looking at incomes. I am looking at expense other than sale and purchase, of course. I'm looking at the income and expense, which is other than sale and purchase. It is income and expense other than sale as well as purchase. So looking at incomes and expense other than sale and purchase. Now there are two things in terms of income. And there are two things in terms of expense which I want to introduce you. There is an income yet to be received. There is an income which is yet to be received. There is an income which is received in advance. There is an income which is received in advance. So either there is income not received or there is income received in advance. Now, when you say received in advance, it means received for the next year. Now, let's also tell you one thing more. When I say accrual basis of accounting, there is another important aspect of accrual basis of accounting, and that is the income and expenses are recorded only when they are for the current year. You're going to record an income when it is income for the year. You're going to record an expense when it is for the year. If you receive an income for the future year, if you receive an income in advance for the next year, that's not income for that year. That's not income for that year. Similarly, if you make a payment of expense for the future year, you make advance payment for the expense, it's not an expense for the current year. Don't book an expense. So when there is an expense for the current year, paid or not paid, you capture. When there is an income for the current year, received or not received, you capture the income. Mind the words. I said, when there is an income for the current year, you receive or not, you book it. When there is an expense, it is paid or not, you book it. But if you pay for the next year, no expense. You receive for the next year, don't call it income. So if you're receiving money for the future year, don't use the word income. If you're making payment of expense for the future year, don't call it as an expense. Let's come back. So let's look at income yet to be received. Let me ask you, are you going to book an income? If there is income for the current year yet to be received, are you going to book an income? Yes. If there is income, somebody said, no, I am. This is income for the current year yet to be received. We are going to book income. Okay, next. There is an income you receive in advance for the next year. Are you going to book an income? Are you going to book an income? No, because this is not an income. This is not income for the current year. So if I'm not going to book an income, what will I book? Somebody paid me money and he can take that money back from me. I owe this money back whenever he asks me. So instead of income, you are going to create liability. So remember, if there is income for the current year not yet received, you still book the income. If there is income received in advance, if there is income received in advance, in that particular case, you'll say it's not an income, it's a liability. You owe this money back. I hope I'm clear. So let me give you three inputs now. Tell me whether you book the income or not. Income for the current year received. Shall I book the income? Income for the current year received. Yes, I'll book the income. Next, income for the current year not received. Shall I book the income? Yes, I'll still book the income. Okay, income received for the next year. Shall I book the income or a liability? I'm going to book a liability. Super. So I guess we are clear with the concept of income. Now let's come to expense. Then we'll take some entries. We're going to take some 6 entries with you. Now let's come to the expense. Expense yet to be paid. Expense yet to be paid. And then we're looking at expense paid for or paid in advance, paid for the next year, that is paid in advance. Now let me ask you again 3 questions. Expense for the current year paid in cash. Are you going to book the expense? Expense for the current year paid in cash. We're going to book the expense. Good. Next. Expense for the current year yet to be paid. Are you going to book the expense? Yes. Here again, I'm going to book the expense. Expense paid for the next year. Are you going to book the expense? No. I will not book the expense. In this case, instead of booking the expense, you are going to book an asset because you paid something in advance, the benefit of which will come to you. Since you paid the expense in advance, the benefit of this will be earned in the future. Wow. Moral of the story. I am now going to put some quick questions to you. Moral of the story. Let's put some quick questions to you at this stage. I'm putting now 6 questions with double effect. 6 questions with double effect. So, won't salary outstanding be a liability? How do we book an expense if it is yet to be paid? You are going a little faster than me. No, 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 no. Wait. I am yet to answer that question. I'm now going to give you 6 situations. You need to decide the 2 accounts. I'm going to give you 6 situations. You need to decide the account. Number 1, salary paid for current year. Give me 2 accounts. Salary paid for current year. Very good. Salary and cash. Super. Next, salary for current year not paid. Are you going to book the salary? Yes, but there's no cash, so liability. That liability will be given a nomenclature, outstanding salary. We'll give a name to the liability, outstanding salary. I hope you got your answer right. So when you say that there is a salary paid in cash, there is salary in cash. When you say there is a salary which is for the current year not paid, still book the salary, still book the expense, and liability will be given a specific name, outstanding salary. Number 3, salary paid for the next year. Are you going to book salary? No. Give me 2 accounts. Give me 2 accounts. Salary paid in advance. Asset and cash, not salary. Not salary. So it is going to be asset and cash. And we'll give a name to the asset. We're going to give the name to the asset, and that is advance salary. Or call it as a prepaid salary. You call it as an advance salary. You call it as a prepaid salary, your choice. Did you get the inputs? I think let me document this. I'm looking at now 3 inputs to you. I'm looking at the 3 inputs now. So we are looking at expense, and I'm looking at 3 variations in the expense. I'm looking at for current year paid. Then I'm looking at for current year not paid. And I'm looking at it is paid for next year. It is paid for the next year. So these are the 3 variations. So when you say it is paid for the current year, I'll definitely book the expense. Paid means there is cash. Expense is expense, of course, cash is asset. So debit all expense, expense will always be a debit, and cash will be credit by default. So salary debit, cash credit. Now, when you say it is not paid, you still book the expense. But if it's not paid, you're going to call this as outstanding expense. Expense is expense, outstanding expense, liability. Expense is always debited, so the expense gets a debit and the outstanding expense gets a credit. Watch the entries carefully. So you notice in the first 2 examples, when the expense is paid, I book the expense. When the expense is not paid, I still book the expense. When you paid the money, the cash gets a credit. If you do not pay the money, you create a liability that is called outstanding expense. Now, when you pay the expense for the next year, you cannot book an expense. You cannot book an expense because it is not for the current year. The cash, of course, is paid, and we're going to call this as advance expense or prepaid expense. What do you want to call it as? Cash is an asset. Advance expense is also an asset. The cash is decreasing, so cash will get a credit. So in this particular case, the entry becomes advance expense gets a debit and the cash gets a credit. There is a decrease in cash, so the other account by default gets a debit. Look at these three entry. Any confusions, any questions, ask me. Are we pretty clear, friends, with these three entries especially? The expense paid in cash, the expense not yet paid. We're booking the expense in both cases. If you pay, it's cash. If you don't pay, it's liability. But if you pay in advance for the next year, you cannot book an expense. You need to create an asset because the benefit is yet to come. Super. Are we clear, friends, with this part? So far, so good. We can now do the exercise for the asset as well. And you must chronologically revise all this as well. You'll get more expertise in terms of creating entry. Let's take it to the next level now. Income for current year received. Tell me the two accounts. Income for the current year received. Give me the two accounts. That's right, cash and income. Good. Number two, income for the current year not received. Are you still going to book income? Yes. But I am going to create an asset because I did not receive the money. So I'm going to create an asset and we're going to call this as accrued income, not debtor, not debtor, accrued income. The asset will be given a name, accrued income. When the expense is not paid, we use the word outstanding. When the income is not received, we use the word accrued. Generally, when there is an expense, we don't call the word outstanding income. The word outstanding is more comfortable used for expense. The word accrued is more comfortable used for an asset. Can we use the word income receivable? Yes, you can. There are no fixed nomenclatures in accounting. Companies can use some generic terms as well. You can. You call it as income receivable, you call it as income accrued, one and the same thing. Next, income received for the next year. Are you going to book income? Income received for the next year. Are you going to book income? No. Liability. We're going to book a liability because you're receiving advance income. So advance income becomes a liability. Let's document this out as well. This must have been a little heavy compared to this, but don't worry, it's all easy. So let's, I think, take this next further out here. Is that also called a deferred income? You can call it as a deferred income as well, not a problem. You can call it as a deferred income. You can call it as an advance income. Yes. So let's create some variations on the income as well. Let's apply the three-step again. So we're looking at income for current year and it is received. We're looking at income for current year not received. And we're looking at income which is received for next year. It is received in advance. It is received for the next year. Now let's look at the two accounts again. As we just made a walkthrough, let's look at the two accounts. Can I say if it is for the current year, you're definitely going to book income? Yes. Second account, cash. Income, of course, is income. Cash is asset. Income always gets a credit. So by default, cash gets a debit. Cash debit. Incomes gets a credit. Wonderful. And then you say for current year not received. So one is income. What is the other account? Accrued income. That's right. We create a liability, and that liability is going to be given a name, that is accrued income. That's going to be called as accrued income. So the incomes is always credit. So the income, okay, let me first also make a mention. Income is income, and this is liability. So in this particular case, you can put the entry accrued income gets a debit, and the incomes are always given a credit. Why a liability? Oh, sorry, my mistake, my error. It's an asset. My error, my bad. So this is asset. Sometimes I start writing and I start thinking of the next step. Happens with me. Must be happening with you as well. So accrued income and the income gets a credit. That's fine. And then finally, we are also looking at now the third permutation, income received for the next year. Are you going to book an income? Of course not. So this is advance income. This is advance income. Cash is an asset. And what about the advance income? That's a liability. That's a liability. So cash is increasing. So cash gets a debit and the advance income gets a credit. Super. I guess I am pretty clear with my inputs on my three-step model. I have given you a couple of inputs in terms of cash transactions, in terms of non-cash transactions. I guess now, if you got any questions, I'm not taking complex entries at this stage, but if you got any questions, otherwise, testing time. If you got any questions, otherwise, testing time. I want to take a small little test. Ready for the test? 5 questions, 2 marks each. You get to get a score of 2 into 5, 10. 2 marks for each correct answer. Don't give me any answers on the chat box. I'm going to give you 5 transactions. You will just give me the entry. I'll give you the entry later. You don't give me any answer. You'll make your checks on the things and give me the results. Please do not give any answers on the chat box. Do not give answers on the mic. I'll give you 5 transactions. You take 2-3 minutes. Decide your answer. I give you the answer. 2 marks for each correct answer. 0 for a wrong answer. Let's see the score. I'm pretty confident we're going to get a score of 10 out of 10. Let's see if you keep the word. Let's begin. So let's take a small little test at this stage. Small little test at this stage. Please do not give any answers on the chat box. Rent received in advance. Salary not yet paid for current year. Interest accrued. That's income. I'm taking the interest accrued means income. Next, advance salary. And let's keep the fifth one a bit easy. Loan taken. So these are the five transactions. I think it'll take you hardly 2 to 3 minutes. Let's get your answers on that. Let me know once you're done. I'll share the answers. What is written in the third point? Third point, interest accrued. So once you're done, let me know. Then I'll share the answers to you. Done. Okay, that's great. I think I got a few messages done. Let's get some more messages before I give you the answers. Okay, we got some couple of done messages. I guess, yes, seems to be some of you are done. Let's still wait just for a minute or so. Interest accrued is on the income side, not the expense, right? Yes. Interest, I said, is on the, and we use the word accrued for incomes. We use the word outstanding for expense. So when I use the word accrued, it is indicating interest income. Right. So I think I can share the answers now. Now, I think most of you have given the answer done. Anybody still doing, or can I share the answers? Can I share the answers? Everybody's done. Anybody still doing? Okay, wonderful. So now I'll give you the answers. You make your checks. 2 marks for the correct answer, 0 for a wrong answer, half correct, 1 mark. Do the calculations. Okay, let's begin the jury. It says rent received in advance. It's not an income because you're receiving in advance. So in this particular case, the two accounts are cash. Cash will increase, that gets a debit, and I cannot book an income, and therefore you're going to record a liability, and that is rent which is received in advance gets a credit. The salary which is not yet paid for the current year doesn't make a difference. Even if you have not paid the salary for the current year, you need to still record the expense. So one is a salary, which is an expense. Expense always gets a debit. And since it is not yet paid, you need to create a liability. And that is going to be called as salary outstanding. That gets a credit. Then you say interest accrued. So when you say there is interest accrued, it is income which is not yet received, but you need to still record the income on accrual basis. So there is an interest income. So interest being an income is going to be given a credit. And since you did not receive the income, you need to record an asset, and that is the interest accrued account itself. That is an asset. Next, there is advance salary. So when you look at advance salary, it is paid for the next year. You can't book the salary. You can't book the expense. but there is certainly a payment of cash. The cash decreases, we give a credit. So the corresponding is creating an asset, and that is advance salary, because you can't book the expense. So you create an asset, that is advance salary. And finally, loan taken, there are two accounts impacted. So one is there is a cash increase that will get a debit, and there is a liability which is a loan and that gets a credit. Now let's get the answers from your side. What is your scores? 8, 10, 10, 8, 10. Majority is on a 10, few people on 8. I like it. Majority is on a 10. There are a couple of 8 as well, but that's good. More or less nobody's got anything below 8. I think one person got 7, but I think it's 8, 10, 8, 10. That's pretty good indeed. So that means you've learned the art of making the journal entries with you. Absolutely great. That's great to know. That's great to know. Wonderful indeed, friends. So I think that's happy. I believe we've learned the modern art of making the journal entries with you. I need to push a little early today, so I think we are stopping the class as of now. So instead of 8:30, I'm just pushing 15 minutes early today for some work. So that's all. Next class we're going to learn the art of making entries with traditional technique as well. We'll teach you the traditional technique in the next class. Notes will be saved. Yes, I will definitely save the notes. Right, friends. So thank you very much. I think for the day, I'm going to see you in the next session and we'll learn the traditional technique. Thank you very much. We'll see you in the next class. Bye bye. Take care. Thank you very much. Enjoy your day.